This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. As the cleanup in Florida continues after Hurricane Ian, we're starting to see how the storm's damage could impact home buying both in Florida and around the country going forward. But those impacts won't be felt for a little while, so we'll get back to that later. First, we're getting a look at how much the mortgage market has changed right now with third quarter earnings reports coming out. And we'll start with JP Morgan Chase, which beat analyst projections but still saw net income fall compared with the third quarter of 2021. The largest U.S. bank reported $9.7 billion in net income, down 17% from this time last year. And home loans in particular took a hit. The $920 million this past quarter is down nearly a third from where it was a year ago. CEO Jamie Dimon didn't repeat his warning of a recession, but he did say the bank faces significant headwinds, including stubborn inflation prompting the Fed to raise interest rates, and the economic impacts of both the ongoing war in Ukraine and volatility in oil prices. For Wells Fargo, the fall was even steeper. The $3.85 billion in net income for the third quarter was a drop of 31%. And again, home lending was a big reason why. At $973 million, Wells Fargo saw home lending fall by 52% from last year. Wells Fargo also suffered $2 billion in operating losses because of court cases and regulatory action. Unfortunately, volume isn't likely to turn around as long as mortgage rates remain where they are. We told you yesterday that first-time homebuyers are showing interest again, but that's not enough to prop up the market. Not only are mortgage applications down again for the 8th time in 9 weeks, but buyer interest continues to fall even further. According to Redfin, fewer people are searching for homes online, and touring activity is down 23% from the start of the year. And Redfin says some other market indications show demand is even lower than it was during a slow summer. That's resulting in fewer sellers putting their homes up for sale and price drops for homes that are on the market. Coming up, Hurricane Ian will certainly have a lasting impact on Florida, but it could also change parts of the home buying process around the country.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nymortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nymortgageexpo.com.
Welcome back. We're still totaling the cost of damages after Hurricane Ian hammered parts of Florida. But in the meantime, experts say this could result in changes in building codes, insurance policy, and other aspects that impact home buying. Editorial director Christine Stewart has more about the impact of these extreme weather events.
As we're discussing, it appears Hurricane Ian has displaced thousands of Floridians whose homes are now uninhabitable, taking not only their shelter, but their financial safety nets with it.
Florida is still in the early stages of its recovery from Hurricane Ian, but we know a few things. The cost will be expensive and will likely see impacts on home buying. For starters, experts say Ian shows the need for better zoning regulations to make sure people don't lose their homes. For many people, losing their home also means losing their only real source of wealth.
It's paramount that as a matter of public policy, we can commonly consider the risks that natural hazards have on the viability of home ownership for LMI families.
Homes built after 1996 seem to fare better according to CoreLogic. That's likely because stricter zoning regulations in response to Hurricane Andrew. That could mean other places that face a risk of natural hazards follow suit. Another issue, insurance. It's important that originators and other professionals in the home buying process ensure customers know what coverage they need.
If we can do these things, the stronger a position will be to ensure that future homeowners are not at risk of losing not only their shelter, but their key source of family wealth.
But buyers in some parts of the country have a hard time with that. They need insurance to get a mortgage, but in places with higher risk of natural hazards, they either can't get coverage that gives them full protection or they have to pay excessive premiums.
Yeah, it's a massive headwind. I mean, you look at California, there's already properties that you can't get insurance for.
Industry veterans disagree on what Ian will mean for the housing market in Florida and surrounding region. Some worry this could mean too much stress for a system that's not ready.
We have currently in the US, we're experiencing severe labor shortages, supply chain disruptions, et cetera, not to mention home builders that have just been beaten up recently.
Others say the market will be fine.
I honestly, I think the impact of the hurricane on the real estate market is going to be very localized to the areas that were directly impacted.
One group of buyers that could be impacted, investors. Some renters have had a hard time reaching the owners of their buildings, and that could lead to regulatory changes.
I don't know how it would look, but I think that it has to be, if they're going to be a significant home buyer in certain communities, there has to be accountability and, time frames.
For the Mortgage News Network, I'm Christine Stewart.
Thanks, Christine. And finally, today is the last day to nominate a younger professional that you think should be recognized for moving the industry forward. We're seeking submissions for our 40 Under 40 contest. Nominees, of course, must be 40 years old or younger. Honorees will be selected based on their contributions to the mortgage industry and their impacts. Only completed submissions received by the end of the day will be considered. Go to nmplink.com/40 under 40, and that's using the number 40. We'll be right back with what else is interesting today.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
Here's what else is interesting today. Yesterday's CPI report, paired with the strong job numbers for September, basically guarantees that the Fed will hike rates by 75 basis points for the fourth straight time at its next meeting. So will the boomers be okay? Social Security checks will increase by 8.7% next year, and the biggest cost of living increase for the program since 1981. And that means checks for 70 million Americans will increase by more than $140 a month beginning in January. That's at the same time that Medicare Part B premiums will fall by 3.1%. But inflation is at 8.2%, so it's unclear how helpful that will be. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.